So there's this huge XRP advocate who's convinced ETFs are about to skyrocket XRP's market cap straight into the trillions. I mean, we're looking at potentially hundreds of dollars per token. I'm going to unpack his entire theory for you so you're totally in the loop on this. But here's the thing. We've got to clear up some major misconceptions about how ETFs actually operate. You know how ETFs set along T+1, yeah? Settlement kicks in the following day, which means all that purchasing action, that's happening tomorrow. Let me break down the mechanics of these funds for you. Stick with me through this video and you'll basically be an ETF expert yourself. All right, let's jump in. Daily average scenario equals $245 million inflow for one ETF fund. Times 12 ETFs, that would be 2.94 billion XRP daily net inflow. Times that by 100x market cap multiplier equals 294 billion. Yep, that's daily. So check out what he's arguing here. The multiplier effect in a market with low liquidity, a relatively small amount of new capital flowing in, can cause a much larger percentage increase in total market cap. This is because the new money is being matched against a limited available supply of the asset, driving up the price disproportionately. The calculation is often described as a ratio of the increase in market cap to the new capital invested. For example, if 1 billion investment results in 50 billion market cap increase, that's a 50x multiplier. And why does this work? Well, most XRP isn't just sitting on exchanges waiting to be sold. The available supply is way smaller than the total amount out there. This massive market cap multiplier, we've been hammering on this concept for years right here on the channel. Why it happens? Illiquidity. Cryptocurrencies with fewer coins available for trading have lower liquidity. This means that large trades have a bigger impact on the price that they would have more liquid market supply dynamics. The multiplier is based on the differences between the total supply of an asset of the supply that is actively available for trading. What is this going to mean for XRP's price over the third X, 30 to 60 to 90 days, when you plug in Chad's formula and assumptions? Look at what we ended up with here, okay? Taking that 2.94 billion number, applying the 100x multiplier effect, then factoring in circulating supply, overall market cap, and current pricing, running these projections across 30, 60, 90 days with his methodology, you get some truly bonkers price targets. We're looking at $150 for XRP in just 30 days, $295 at the 60-day mark, and $442 when you hit 90 days. Here's where I pump the brakes though. There's no way every ETF pulls in this kind of capital flow. Chad's projection might be overly optimistic, but I'll give him this. The logic actually holds up if supply stays scarce and these ETF products keep eating through whatever XRP is available. The real wild card is seller behavior though, right? If the big players don't get cold feet and start liquidating their holdings around $25 or $50, then yeah, you could legitimately see prices go parabolic. This is literally what everyone's sitting around waiting for. But listen, you've got to zoom out and see the bigger picture here. Think about it. ETFs are coming online. Treasury operations are spinning up. Regulators are finally stepping in with clear rules. Oh, and stablecoins? They're absolutely blowing up right now. Then throw in the fact that actual banks and heavyweight financial institutions are lining up to get their hands on XRP for real-world use cases. All this action, yeah. EVM sidechain, the whole DeFi infrastructure, it's like watching dominoes fall in every direction. All of this, it's gonna send XRP demand through the roof. My take is there's just not enough XRP chilling on exchanges to meet what's coming. And that's when things get spicy. We're talking the kind of price whiplash that'll make your head spin. Okay, so Chad chimes in with this. If you're still asking, why didn't the price get affected today? Understand how the ETF process works tomorrow. T+1, the net inflows will be handed over to purchase the asset. What I'm saying is that the ETFs are about to start going on a buying spree that will not stop once they start how net flows actually work. Investor purchase. When investors buy more shares of an ETF on the secondary market than they sell, there is a net inflow creation of new shares. This demand triggers a process where an authorized participant creates an ETF shares by delivering the required baskets of underlying securities to the ETF issuers. Capital allocation. The money from the sale of these new ETF shares is given to the ETF sponsor, who then uses that capital to purchase the underlying asset, which is XRP. So tomorrow could be game time. That's when the real shopping spree might begin. Whenever the next ETF hits the market, tomorrow, you're going to see all that pent-up demand explode on Monday, and it just keeps snowballing. We've been down this road with Bitcoin already. Ethereum did the exact same dance. If you're totally lost on how any of this machinery actually operates, don't sweat it. Jump back to that earlier segment and give it another pass. It's all there. Now, impact on the market. This purchase of underlying assets could drive up their prices, especially in markets like Bitcoin ETFs where the inflow of capital directly buys the cryptocurrency. So what's catching everyone's attention is Canary raking in $245 million right out of the gate. But tons of experts in the ETF arena were basically writing us off. They genuinely doubted the XRP faithful would turn up with guns blazing. Well, guess what happened? Out of 900 different ETFs that launched throughout this entire year, XRP just snagged the crown for highest day one traffic at almost 250 million bucks. That's bonkers, people. What this proves is we're dominating the charts here. Yeah, pyramid feels off. Think of it more like we're holding the championship belt right now. I mean, who knows? Top of the leaderboard, peak position, whatever. We're crushing it up here. We've basically climbed Everest at this point. Moving on. So James drops this bomb and goes, looks like XRP from Canary Funds has the largest day one trading volume for an ETF launch in 2025. Squeaks by BSOL 57 million. Doing it on a down day is pretty impressive. You can literally watch the skeptics doing double takes right now going, whoa, hang on a minute. Turns out these XRP people weren't just making noise. They actually called it, didn't they? Yeah, you're welcome for that reality check. All right, but wait, it gets better. Mike Novogratz is apparently having some kind of awakening. There's got to be something potent in whatever he's drinking lately because suddenly Mike Novogratz is seeing the light here. Take a listen to this.
How do you turn something from being a token into money? It's a really, really complicated and difficult. So far, we've had a few that have done it. XRP has done it. And that surprised everybody, right? Because
did it surprise you?
It did. And listen, we're a big owner of XRP, the company, but the token, because I had all the same reasons everyone else. It was less decentralized. It was not a true blockchain. You can all the criticisms at XRP. It missed something important. They built a fierce community of people that believed in their narrative and turned it into money. And for them, it's money.
To us, though, man, this is the entire ballgame. That's what Mike's missing right now. You see what I'm saying? He just doesn't grasp the full picture yet. Whatever, all good. Maybe someday the penny drops and he figures it out. So here's the thing. Ripple is investing $4 billion into build a prime brokerage, custody, treasury tools, and stablecoin to push the bridge crypto with Wall Street. I need you guys to pay attention to this one because understanding why this matters is absolutely critical, all right? Ripple's $4 billion investment buying spree to Hidden Road, now called Ripple Prime and G Treasury, and recent acquisitions are fundamentally reshaping XRP's position and Ripple's strategic future, unlocking powerful infrastructure for major institutions or corporations worldwide. Ripple Prime and its acquisitions directly addresses institutional needs by providing regulated prime brokerage access, robust custody solutions, risk management, and instant liquidity tools. This means that banks, asset managers, and multinational corporates can access digital assets like XRP through compliant, secure channels for the first time. They get deep credit, cross-margining, and post-trade settlement services they expect from traditional finance. G-Treasury's integration allows treasuries to manage real-time liquidity across traditional digital assets, making it possible to move capital instantly instead of waiting hours or days for legacy payments to settle. Ripple's tools eliminate the need for pre-funded accounts, freeing up trapped capital and drastically reducing operational FX risks and global corporates. This unlocks growth in new markets and reduces the cost for companies operating internationally. Ripple's ecosystem now includes hundreds of banking partners using its blockchain rails for settlement, offering scalable, low-cost, ultra-fast payments with XRP at its core. The RLUSD stablecoin supports frictionless cross-border transactions, and MasterCard is piloting XRP settlements for card payments, making XRP's infrastructure the backbone of global payments instead of just speculation. Why this matters for top institutions? Regulatory clarity. Ripple's services offer vetted, compliant access, which is crucial for banks and major funds still unsure about the risk of crypto in their profiles. Liquidity access. Institutions can use Ripple Prime to route large orders, manage exposure, and tap deeper liquidity pools for trading and settlement, expanding XRP beyond speculative assets to financial infrastructure. Operational efficiency. Corporate treasury teams can automate capital management, hedging the payments, reducing manual intervention, and speed up global operations. Market expansion. With Ripple's platform, companies can enter new markets and operate continuously, unlocking new business models. All right, so Ripple grabbed Hidden Road, rebranded it as Ripple Prime, and boom, they 3x'd that thing in under 6 months. Like seriously, less than half a year and they tripled it. You know what that means for everyone else in the game? Pure panic mode. Because imagine you're running a competing firm and suddenly there's this company next door that can shuffle money around like it's nothing, stack yield while they're at it, plus a whole bunch of other perks you can't touch. You're basically showing up to a Formula One race in a minivan. So now what's happening? It's absolute chaos. Every bank, every financial player, every corporation, they're all scrambling over each other trying to one-up the competition. Best features, coolest tech, bulletproof security, the whole 9 yards. Call it whatever you want, it's a feeding frenzy, and nobody wants to be left behind. Look, this is the single biggest money migration you and I are ever gonna live through, period. And you're gonna just stand there with your arms crossed, not even dabble a little bit? Trust me, all those people clowning on crypto right now, they're setting themselves up for major regret. You don't need to mortgage your house, just get off the sidelines. Real talk, can anyone promise which platforms are still going to exist decades from now? Of course not, but some bets are way smarter than others. XRP, Ethereum, Solana, these aren't lottery tickets. These are the heavyweights throwing punches in the ring right now. And where am I? Buckled in tight, death grip on my holdings, not budging an inch. All right, that's a wrap on this one. Really hoping you pulled something useful from this. Hit me up in the comments. I actually read those. Go ahead and like this if it clicked for you. Pass it along to your skeptical friends. Just genuinely glad you spent this time with me. See you in the next upload.